Hello, everyone. It's Thursday, the 13th of March, 2025. Today's big data is the US PPI, the producer price index number that's due in about 15 minutes' time. We've also got the weekly continuing and initial claims, 225,000, the expectation for claims this week. Remember, it's remained very, very robust. Signs of the jobs market cooling a tad. Obviously, we had that miss for non-farm payrolls on Friday. So, cooling economy, cooling jobs. Will unemployment come down? Doesn't look like it. See what the Fed have got to say next week, next Wednesday. So, anyway, plenty of action before then. Yesterday, I'm sure you're with us, we saw a cooling in US inflation expectations. So we were down, the core came down to 3.1%, although it's still elevated compared to where they want it to be at 2%, but 3.1% for the core, and the headline came in at 2.8% from 3% last month. So will the PPI follow that lower? It has done. The trend's been lower as the CPI has been lower, and it's sort of followed. If we look at the headline, where's the headline reading? Where's the core? If we look at the here we are, the core here for PPI as well. That's continued to track lower, but again, it's a bit sticky. It's a bit stodgy here on the monthly number. If I just look at the annualized number. I've only got the monthly ones on there. I can't do that with the annualized ones. We haven't got a calendar. I haven't got a calendar. I could, a chart I could show you down here on our calendar here for the headline PPI data that's going to come out shortly. So we'll have a look at that. Obviously, when the data comes out, so far today, well, yeah. If we just look at the euro here on the hourly chart, guys. Yesterday, obviously, we rallied. Sorry, not yesterday. On Tuesday, we got to 109, 109.40 zone, wasn't it? Here on the hourly chart. So we're compressed at this high level. These are 108 level. Here's 109. So we've been over 109 sporadically. Yesterday, we spiked after the data to 109.25. We talked about that, didn't we? Yesterday's live broadcasts. Obviously, we had the Bank of Canada as well later on after US CPI later. So we did rally again back later on in the day to 109.25. Couldn't hold that. And now we've sort of sunk since then. The data out of Europe hasn't really impacted that. This morning, it was really just PPI data from Switzerland, which had ticked up, but that doesn't necessarily impact the euro. And industrial production data was better, quite significantly better than expected this morning, but that's not really going to move the euro to an extent. It's just this cooling from the key 109 area has continued into close yesterday, and then we've moved down a bit lower again this morning, but we're into this area, this 105 at 108 to 50, 60 area, which we struggled to get above earlier in the week as we were moving up. So it's another sort of zone we're moving into at the moment. So 108 is the next downside, big round number as we trade at 108. What's that? 108.58 at the moment. So euros cooled a tad, dollars a wee bit on a firmer footing this morning. 129.50 is where sterling trades this morning. Again, sort of cooling a bit like the euro trade from that spike yesterday. Where we went to 129.90 immediately ahead of the CPI data yesterday, or as the CPI data came out yesterday. Then we had another rally, a bit like we saw with the euro, to that area before we cooled into close. Yesterday, indexes were a bit mixed. We had a tick up of nearly 0.5%. We went to 55.99. Is that yesterday? Yeah, Wednesday. Yes, 55.99. So just shy of 5,600 for the S&P 500. We're lower again today by a tad here. So we're continuing in this downtrend. We should go back to the daily again. We look at this every day. Where are we? Well, you know, we're banging down. The low 55.33 was our low on the 11th. This time of the year, I can't really show you this on these charts. I didn't go back far enough, but this time of the year, this mid March, traditionally is quite a weak time of the year. Anyway, and sometimes some of the lows of the year can be put in March the 12th, March the 15th, that sort of time frame. Remember, March 15th, beware the Ides of March. So it's not unusual seasonality. However, you know, as we've been saying for a while, you know, the sell-off, you know, is much steeper than the grind up we've had. So significant sell-off. Obviously, this is a key area now. This 55,500 level we talked about before. You know, and you look to the left, where do we get that spike there? That took us to 54,100 for the S&P back at the beginning of September last year. And then we look further down. Oh dear, look at this. Where does this take us? This is 5,200, and this is the August the 5th intraday spike, which took us back to 5,100, which was a bit of a cluster here back in the spring of last year. So you can see, you know, the strong rally for 23-24 is getting sold off quite aggressively, and obviously we're below the here we are. This is the November election day. As we've rallied into the year end, we're under that now quite significantly, and the trend remains to the downside. And that's the same for all the major stock markets. So we've got weakening in the stock markets. The DAX continues to roll over this morning as well, although not as significantly as the American stock. So there's churn that we've seen out of US into European equities. Obviously, the German markets have been lifted by the fiscal recalibration in Germany, but we've rolled over. But we're currently sort of banging around at this 20-day moving average level here on the DAX. So key level is forming this week around about this 22,500 level for the DAX. We're currently at 22,488. Hopefully you can see that. Across the English channel in the UK, we're at 8,500. That's come down much more aggressively than the DAX has. We haven't had this fiscal standing on its head that the Germans have got. So under the 20-day moving average, and then on Tuesday we crashed under the 50-day moving average as well. Another significant level has been tested here at the 8,500 level. So again, the FTSE also weak, representing or reflecting what's going on in the broader equity market at the moment. And over in Asia, the Nikkei 36,800. Again, a big down level, and again here on Tuesday, poking in at 35,900, a low we hadn't seen since September. So again, a significant. I'm just going to put that in here on my chart here. That intraday low there, and take that back to a cluster, a support zone, which actually got a bit lower, didn't it? We got all the way down here in the panic at the beginning of September to 35,100, but that was more the politics that was going on at the time. I seem to remember, because we bounced from that quite significantly there. But I'll put that on there as well, 35,100. So downside levels to watch for the Nikkei, those of you who trade the Asian markets. Guys, if there's anything you want me to have a look at in particular, let me know. We are still 5 minutes away from the actual data rolling over. So we'll have a look at Bitcoin. Sort of recovered a wee bit today. Bitcoin 83,000. These lows we put in this week. Under this 78,000 handle, so we're up in significant day yesterday. Undecided where we're going, and we're a bit undecided so far today as well, by the looks of things. But if we look at the hourly chart, it's sort of been biased to the upside today. Relatively sort of holding that big candle we had on Tuesday evening took us to back to this 83,000. We've held this 20 and 50 hour moving average. You can see we've got a bit of higher highs there, but then it's flattened out at 84,000. We can't get over 84,000. The lows are nicely getting high, but we've got a bit of a compression here, so we'll see how that breaks out on the hourly basis, with 84,000 being the key restriction to the upside for Bitcoin, and supported really by the 50-hour moving average there at 82,500. So there's 82,500 is our support this week so far, and 84,000. So it's getting, as you see, it's getting tighter. So the tighter the pressure, the tighter the compression, the bigger the break, if it comes or when it comes. But anyway, watch Bitcoin, a break of 84,000 to the upside, a break back under 83,500. Could take us back to test the 80,000 and the 78,000 quite quickly. You know how crypto can move around. Metals, gold has come back to life to 29.43. As you're aware, well, I hope you're aware, we were long this here from the 4th of March, and it was going nowhere. I nearly closed it out as we went into the 20-day moving average last week, but we're in the money now. And whilst I've got you here, I'm just going to drag the stop loss up and I'll put it up on the Discord group as well. So my stop loss, which is currently down here at 2887, which we moved up yesterday, I'm going to move it up again just shy of the 4-hour 20 period moving average. So we're in the money now. We can't lose on this trade if it reverses, because we're above our entry. So stop loss now on the gold position at 29.20. Just make that. And I've already done that on my actual trading platform, but this is just demonstration purposes here on here. So 29.20 is where the stop loss for the gold trade has been placed. So let's just go back to the calendars and PPI out in a minute or so. Unemployment claims also out in a minute or so. So see how that reacts. See if they actually, let's drill down to the 5-minute time. Let's see how gold reacts to the PPI data. We've been down. This is the 5-minute chart on gold now, guys. So our high of the day is 29.49.22. So we're shy of 29.50. We've tried that twice. You can see on the 5-minute chart, and we're down quite significantly in the last 10 minutes. But anyway, so if we haven't, I mean, it's not likely to move the gold market significantly. But you know, later on when the US obviously they're open earlier than normal in less than an hour. So the market, the traders will be at their desk in New York. Now that's our high of the day. That 29.49 it was. You feel there we are. That's our high of the day. The lower, is that the low of the day? Yeah, 29.30. See how that's reacting, but we're currently chopped lower quite significantly there on the gold market. See how that reacts. So let's look at the calendar. Data is still 20 seconds to go, and see what that looks like. So euro had rolled over from 105 to the downside. This is relative. I mean, here instead of 5 minutes, it is relatively negative, so that would have been a short position intraday. There we go. We're back to the upside. So there's buyers for gold at this this sort of support-ish area. It's not right. It's 5-minute chart. It's a support area around about 29.42. So we're up to 29.43. So it's the PPI data and the claims look like. So it's weaker again. So we had the weaker CPI yesterday, and we got producer price index coming in much weaker than expected. An incredibly strong jobs market continues to demonstrate its prowess. 220,000. I haven't got the initial claims on here. The initial claims will be on our not the initial claims, the continuing claims. 1.9 million is expected to spike up to the 4-week average. We just update our calendar because it doesn't update automatically. So PPI is coming weaker than expected, probably more weak than the CPI from yesterday, 2.3% from 3.7% last time. The core has come in at 3.3% from 3.4%, so that's not quite the significant decline, but this claims has added to the robustness of the US jobs market. Core PPI for the annualized 3.4%, and negative, interestingly, for the month of February for the core PPI negative 0.1%. From an upgrade, interestingly, again, this proves this argument about stickiness. An upgrade to 0.5 of 1% and 3.8% from 3.7% for the core. So mixed messages there. I mean, again, the impact of the Trump's changes in administration hasn't had an impact on that, but certainly that's again sort of mixed numbers. But if we look at gold, sort of initially rallied on probably a weaker dollar on that. So let's go back to the major crosses. So euros 108.57. So yeah, the initial reaction on the data has taken the euro to 108.78, but here, literally on this fine, you can see the argument is still to the downside. So see how that data fulfills its move, but 108.45 is the low for the day. So are we going to test that again? If we go up to the 15-minute chart, you can see it's still angling lower, having given up 109 yesterday. 15 holding there, and we went to the 15 period minute moving average on the initial data move. So we tried to test lower ahead of the data here, and that's our low of the day, 108.45. So watch that if this trend continues, which it doesn't look like it's changing much on that data now. So strong claims, 220,000. And again, if we just click on the calendar, the chart here, you can see the strength of the US jobs market. The claims are not, starting to rise. Unemployment doesn't look like it's rising, although there is signs of weakness in the economy. We shall see. So core PPI, interesting numbers. So headline, let's just quick review. 3.2%. That's very much in line with expectations. Well, the headline was 3.32%. Yeah, it's coming. Yeah, it's weaker than many expected. There was I'm just looking at the spread of the votes here. The core was looking about 3.5, 3.6%, 40, 80%. I'd got a call of either 3.5 or 3.6%. This is the consensus, either 3.6 on the core so weaker than expected, although this upgrade might feed through in revisions next month as well. But certainly it's certainly a tilt down. This also suggests we may see that the cooling we saw in CPI yesterday, right, CPI here. So eventually it's we're the core under that key, down from that key 3%. It was a tick lower than expected. So this should, the PPI feeds into CPI eventually. So again, it's showing that perhaps the weakening of inflation, but it's still, now I'll still reiterate, it's still a concern for all. And obviously the issue about if inflation does remain sticky, the economy does cool, and people start talking about stagflation in the US or anywhere in the world. That's the way we look at things, or the way the economists look at things. Yeah, wages rolling over as well, potentially. Who knows? But we still got mixed overall, relatively, it's still a strong US economy. People are trying to talk themselves potentially into recession as well. I mean, that happens. But certainly there's signs of bits of cracks, but it's still, this jobs number here, that's a very, very robust number. And again, the claims come back down under the 1.9 million, the continuing claims. So Overall, it's it's still relatively positive for the US economy. Obviously, the worry or the fuss is very much focused on the fiscal changes from the new administration and this impact that the tariffs are having. Obviously, Canadians retorted yesterday with a $21 billion worth of tariffs as well. It just slows trade. And as we said yesterday, we said all the time, obviously they are in a free trade deal. The USMCA that replaced the North Atlantic Free Trade Agreement, the USMCA. The administration is saying they will rectify or vilify that deal, so long as there's a US component in the goods that are coming in from Mexico and Canada. But steel, Canadian aluminium remains tariffed, as does the rest of the world. The EU responded yesterday as well with their own 30 billion. Was it 30 billion? Oh, 26 billion euros worth of tariffs as well. The UK, interestingly, keeping their powder dry currently. I don't know whether they're trying to placate Trump or just trying a different negotiating angle. But that data, that US data combined, has continued to push the dollar. Euro dollar moving lower, so we're going to test this low again. So that's I'm happy to take some pips out this 108.45. There we go. We've hit that level. The gold should be moving in the opposite direction. Dollar yen moving up 148.15. Cable 129.42. Actually, just 5 minutes time frame. So there's the initial reaction was to the upside, and now we've rolled over, and again that 50 period moving average holding as the bias continues to the downside. So it's less so for sterling than the euros we saw, but 129.2660. So 129.25 is our intraday low at the moment, so that might be tested again in the wake of all this data. Let's put that on there. There we are. That's our potential low target down for the day, having rallied very significantly in that first 5 minutes, and we're now biasing to the downside. Yen was similar, wasn't it? So yeah, I feel like I've run out a bit of steam today. I don't know why. I'm just feeling a bit tired, but anyway, PPI weaker than expected. CPI was weaker than expected yesterday. Dollar's got a bit of a lift on that. 148 has been breached again for dollar yen. Dollar CAD, the currency, folks, as you might expect. A bit more volatile movement. I think they're meeting today. I think the Commerce Secretary, the old head of what's his broker called? Lutnick, the guy, Howard Lutnick, the guy with the veneers, the white smile. I can't remember the broker he headed up. It's just escaped me in the moment. But new Commerce Secretary, he's meeting the Canadians today about this, about their rhetorically traps. But I mean, he talks a talk. A bit like Trump, perhaps even more so, less of a politician and more of a businessman than Mr. Trump. Wasn't necessarily born with a $400 million silver spoon in his mouth, but Lutnick. Who's Lutnick? Somebody who remembers lets me know who Lutnick was. He's head of a brokerage, isn't he? But it's companies escape the immediately. Anyway, dollar CAD 143.83. 144's looking like a step too far so far today. We've been 143.96, and we've been all the way down to on the immediate reaction of 143.64. So it's only a 30 pip range on dollar CAD, and the general trend remains a bit choppy and undecided. We've been down, obviously, all that initial tariff talk earlier in the week. But we again sort of biasing to the downside. Let's just have a look at what's happened with gold. It looked like we were moving down a bit. 47, we bounced back up here. So that's having another go at the high of the day. There was that move down and then it's been bought back straight away. So 149, 220, 29, 49, 18 is our upside high of the day. That looks like we might have another go at that. You saw we've moved our stop loss up to above entry now from yesterday. So our stop loss is here now, above our entry here. So we've guaranteed at least $3 gain on that trade. Hopefully, never use the word hopefully, do we, in a trading? We'll see how much more it goes if the trend continues. But remember, we're in this on the daily time frame with my system triggered with the support of well, it was here, wasn't it? It was all the way back here. It looked like we were moving up, and then it didn't do anything with 1, 2, 3, 4th day here on was that Monday? Monday, wasn't it? I thought we were going to get out of that, but we didn't. We did close right on the 21 EMA, and then we recovered on Tuesday, up again yesterday, and we're up again today. So I may close this out if we get to the new if we push through and create a new all-time high. I'll close some of it out, but that's nicely in the money. Elsewhere, we are not so in the money. Let me just bring up the Discord chatter. There we are, my friends. So last night we went long oil. The news this morning, the IEA have cut forecasts for 2025. Talking about a 600,000 barrel surplus. So what looked like the system triggered. So you take the trade. That's the rule. Process, guys. Remember, process. And so we're sort of out the money on those two. So if you look at, they're both triggered, both oils, energies. It was both the UK oil here yesterday. This is our entry. I was looking for a quick target. We had a push higher today. That's the daily on the UK oil Brent. But that was early on this morning as I first looked at it. That's looking quite good. And then we've reversed on that on the IEA announcement in this hour here. So we're out of the money. That was our entry. That's our target. Our stop loss is down here. See how that plays out. Again, it's a daily trade, so I may just cut the costs on that. But again, if you look at the 4-hour area, there's the 20. We've already tested the 20 period today. So see what happens with that. That's UK oil, US oil, similar pattern as you might expect. There's our entry, and we've just sunk from entry. Stop loss down here. We might pull that up and close and take the loss on that as it's running. It hasn't had the impetus. I perhaps thought it might. The system thought it out, but I say it's an end of day basis. So let's just leave it. We're going to leave it. We are going to leave it for now. Pound yen was the other major end of day one. The other two have closed for a loss. Actually, pound Swiss has actually gone into profit now, but these are short-term ones which I check. When I put also on here, excuse me, it means I'm usually out early in the morning on those. I check them sort of before 8 o'clock or before 7 o'clock sometimes. But yeah, the Kiwi. Just collapsed against all. The yen came back quite strongly overnight, and there was a 53-point loss on that. And then I took a 8-point loss on pound Swiss, but that has since turned into profit. We just look at the one that is open, which is the pound, the guppy. It's not major, is it? It's not cross. It's what it should be on. The pound Swissy. Pound Swissy. That's pound. JP. There we are. So again, another one. This is we entered here, looking to get back to where we'd been yesterday. It's been against us all day. It was looking quite all right an hour a while ago. Last time, that's the 4-hour candle. That's why. But again, that one's out of the money. It's looking okay here at 9 o'clock last time I looked. It's reversed again since then, and we're down again. So again, that one might be getting closed out. But I'll update the Discord group, obviously, with everybody. Okay, so there's PPI. It's come in a wee bit softer than expected, or quite significantly softer than expected, to be fair to it. Here at 3.2%, and the monthly is absolutely flat as well. Claims here at 22,000 showing the strength of the US economy. Core for PPI 3.4%, so softening there. We've done that, haven't we? The other thing I was wanting to show you today was the state of play with regard to the Fed. Remember, the Fed are up next week. They've got a meeting here next Wednesday. We'll be obviously live for that. Obviously, nothing happening as far as the market's expectations are concerned. This is CME Group, the free sort of internet feed. You can look at it yourself about expectations for where the futures market is, and the options market is, placing expectations on what the Fed will do. So there's a 97% chance of nothing happening in at the next meeting. Next meeting after that, so March, there's no April meeting. We go to May, and we still have a 73% chance of nothing happening in May, and a 25% or 26% chance of a potential 25 basis point cut. So still a 77% chance. Sorry, a 72% chance, 73% chance of nothing happening in May. June is when the market is expecting. Remember, the market is still pricing in potentially 2 rate cuts. June is when the action is expected to take place. So this is a combined sort of 77% chance of at least a 25% rate cut. Some participants are talking about a 17% or 17% of bets now of a 50 basis point cut by June. That seems a little bit ambitious. And July, it's all done and dusted. We get to the end of July, and it's 80. You add all these up, it's about 80 odd percent chance that we will have had cuts by July, and only 15% chance. Although that's ticked up a tad. Of no change in the July meeting. As you can see here, it's 15%. It was a week ago, down at 8%. So the chatter about rate hikes rather than cuts continues, and the Fed remain. Can you actually hear me? No. Oh, the audio's not working, is it? Or is it? Can you hear me? I just realised the audio. Mary had a little lamb's fleece was white snow everywhere that Mary went. Oh, it's not. It's the mic. I've got my headset's not plugged in. It's just in the microphone with the webcam. So hopefully you've heard me today. But anyway, sorry about that. I just realised my little dongle's not plugged in. Let me just plug that in now while I'll wrap up. Mary had a little lamb's fleece as white snow. Right, this microphone's back on. Oh dearie me, where we do? Don't work with live equipment. So what I was saying, basically, a 86% chance by the July meeting, and only a 15% chance. But that's increased quite significantly, as you can see, from where we were even a week ago. See, a month ago, it was 50%, 50-50. So things are changing very quickly in the marketplaces. So I will call it a day. Remember, guys, if you want to come and join us, please do so. We're here to help you. We're all here to help you. I've just realized my screen's been really huge as well. So if you want to come and take one of our challenges, please, whether you're a one-step man or a type trader, or a two-step type lady trader, whatever approach you take, it's up to you. But we do have some discounts on these very well-priced challenges anyway. So a $10,000 gets you $85 gets you a $10,000 challenge. If you want some meaty numbers, 50,000 account is $345. But if you've got a coupon code, if you put in SC25, that will get you a 25% discount across all our challenges. So the 345 comes down to about 260 on that one as well. The beauty of prop trade, and the proptrade.com in particular, I would say this, wouldn't I, is, you've got to follow the rules. And that's the success of any type of trading approach, whether you're trading options, futures, CFDs, buying stock. You've got to have a system. You've got to, accept that, when your trade is going wrong, you close it out. You don't have too much of a loss. The rules on our system, if you want to move to a funded account, you've got to get a 10% profit target. You can't be losing more than 5% of your account. And that makes absolute sense, guys. Absolute sense. So you're winning more than you're losing. And that's how you want to be. You don't want to be losing more than 10% of your entire account, obviously. Because when you're there, it's very quickly you run out of funds. So when if you get to a 10% loss, you blow the account, or you get into 9%, you've got to get 11 or 12% of what you've got left to get back to zero. So it can be quite difficult. So but you follow the rules, keep the losses small. That's the trick. There's no time, there's no rush to do this. There's no time limit. You're not restricted to how long you've got the account open for. Practice. These are significant sums, 50,000 or even you've got $200, $150 gets you $25,000 account. Where are you going to get $25,000 account? Most people, when they go into a normal trading environment, haven't got the capital really. They'll deposit $50, $100, $20 or something, and it's just not enough. You need, certainly at least a few $1,000s to give yourself a fighting chance with the leverage is involved, with the margins that's involved, the volatility of the markets that's involved. So the beauty of prop trade companies, and particularly ourselves, is that we give you all the resources you need. We're here, we're sincerely here to help you improve. But you have got to take responsibility for that, and you've got to accept that losing trades, you cut them, let them go. Don't let them get too big, and that's what the rules make sure you're focused on that as well. So if you've got a trade that's open, you're losing 2 or 3%, get out of it, cut it. It's too much. Do that a few times, you very, very quickly blow your account. But stick to the rules, and then you get the winning trades coming along as well. If you have a process that's working, like this morning we had 2 losers, we've cut them, but we're still ahead for the week. Last night we were up 149 pips points this week, but we've lost 60 pips this morning, so we've lost half of that so far. But the gold trade's looking really good. The oil trade isn't looking too clever. The pound yen trade isn't looking too clever. But see what tonight brings. That's what it's all about. Okay, so that's the end of day schedule I've got on the Discord group, so do join us there. So if there's no questions, guys, I'll wrap this up. I'll see you tomorrow for the University of Michigan, the consumer sentiment and inflation expectation. We'll do a weekly wrap up as well. Obviously next week, so we got the Fed. Nothing happening in the meeting, but certainly the dot plots and their discussions will be very, very key, and what Mr. Powell has to say at the press conference. That's next Wednesday, but we've still got today and tomorrow to get through. The US markets are opening in about half an hour, so trade carefully, and as ever, my friends, may the pips be with you. All the very best. See you soon. Bye-bye.